Welcome to Bunnex Investment Group. In this video, we'll talk about the accurate way of trading M's and W's the accurate way. This is an advanced method, and if mastered, one can make a lot of money. This is actually a guarantee to only those who manage to master this video. So make sure you actually make repeats of watching this particular video so that you may be able to know the exact ways and points of trading of this concept. So we'll first highlight the importance of yesterday's highest price in this strategy. So it's basically yesterday's highest price and yesterday's lowest price. But before we go through, make sure to subscribe to this channel and check the notification bell icon if you haven't done so that you won't miss any of our content as we upload. So in this video, we're going to explain this as the first topic being bias from peak formation, the importance of yesterday's high as well as yesterday's low, the M and W pattern, their variations, and then last but not least, the chart patterns. We'll actually go over real markets so that we may see how it is applied to the best degree. So as always, we need to get bias, and by bias is actually to know where the market is going. Is it going up or is it going down? So we do this by levels counting and see where the higher time frame is going. The most important thing we need is actually acquiring the H1 peak, because the H1 peak informs us of the market bias with a greater degree, and we would know where we are actually going and where we are actually moving next. After bias has been attained, we need to now trade in line with this bias. Here's the importance of yesterday's high. At yesterday's high, there are contracts of the market makers, as we know that within the markets there are other people who have access to large amounts of capital, and these guys will actually have their contracts set at yesterday's high, waiting for the market to be pulled back so that they can be filled. Right? It's actually a complex concept that is used there, which requires a deeper explanation of how these guys trades, the bankers, the hedge fund managers, and so forth. Anyone who has large amounts of capital will actually need to trade in a manipulative 101 concept. So the market will need to retest these zones, but they do so in line with their market maker bias, right? So we've said we need to have the market bias. And by market bias, is the market going down or is the market going up, right? So in doing so, after doing that, we are now expecting to have retest of yesterday's high, retest of yesterday's low, like that. Therefore, it is wise to make trading decisions when the market is at the high or low of yesterday, since there are big fish awaiting to get activated, right? So you need to actually make those decisions at yesterday's high or yesterday's low, because that is where the other big fish are actually waiting. So this is now a very important concept where we are now defining the M's and W's and their variation. There are two possible scenarios of the formation of these patterns, and they may form a wall structure on yesterday's high, or it is second leg on yesterday's high or low, right? Both these states are valid as shown in the next slide. So let's now see how these M's and W's varies and occurs at yesterday's high. So here's the illustration. We've said the first thing is actually to locate a peak, and we do so by counting levels. Levels are taught in our advanced course. If you want to learn more about how to attain bias using levels, you can sign up for our advanced course. Join the Telegram link with the Telegram link that I've put in the description box below, so that you may contact with us directly, free from scammers. Don't entertain anyone in the comment section. All right, so we first attain the peak, right? Here's the peak. After attaining a peak, the next thing is now to know that this, in this case, the bias is downwards. Then yesterday's high, these points are what are important, right? Away from the peak. So we are basically trading away from the peak, but giving particular attention to yesterday's high. So this is yesterday's high level, and the market would come back to that level and create a wall structure. This is the wall structure that we are talking about, where we have two legs on yesterday's high, and this will be a very, very high accurate point of entry if all the parameters are done. If not, I can say we are ranging at 95% accuracy, but the bias will be, or the bias should be, of high degree of accuracy. We should actually first attain the bias first before actually taking this particular type of trades. Then after that, we can see another variation. This variation will not give us a wall structure at yesterday's high, but it will give us only the second leg at yesterday's high, right? Like this, we had yesterday's high, and the market came back at this point, right? And we could actually make our entry right away after retest of yesterday's high away from the peak, right? So it's second leg at yesterday's high. This is the second variation, and for buyers it will be the same concept that we require to apply. So on that note, let's now go over the charts so that we may understand how this is applied in real markets. So this is pound against dollar. I'm going to first just show you the peaks of where I'll be deriving my bias. So in this case, we can see that we had this big outmade peak. This was an H4M that was issued, and from that H4M, we were now knowing that we are now in a downward bias. So right now we are now in a downward bias, and the sets of threes on the H1 are actually in play: a reset, and going in the downward side. So in that case, let's look in the history so that we may see where we could actually make our entries, right? In this case, the first scenario what I'm talking about, this is not this is just for illustration's sake. We can see that we had yesterday's high at this point. The market came back and created a wall structure on yesterday's high like this. So these are the patterns that we are going to be looking for when we get from the peak. So this is the peak, which was the second leg of the H4M that I've showed you earlier. From there, we can see that at reset, that is where, from this point, we can see this was yesterday's high. The market did not come back. It was yesterday's high. The market did not come back. This was yesterday's high, and the market came back, rejected perfectly, and we made our entry. So this is the second variation of our M's and W's, where the second leg has been issued on the second day on yesterday's high, right? From there, we now wait. This was high, the market did not come. This was high, the market did not come. And knowing that the first point that we have entered was a peak, we could have held that trade up to its completion of that cycle. Then from there, we had this peak as well. You can see that on this peak, we had first leg, right? Second leg came to yesterday's high, and you could actually say you were going to skip this one because it was now a peak reset. Trading away from the peak, we could actually say we now have yesterday's high, right? This was yesterday's high, and the market came back to retest that yesterday's high like that, and the market went our direction perfectly, and we actually made this particular trade entry in our VIP signals channel that is going for $100 for 12 months, right? Another examples can be seen on Euro USD. We had our peak. Let's just have a view of the H1 time frame. Sorry about that. We had our peak here, right? From there, this means our bias was in a downward move, right? From that, going to the M15 time frame, which is our tradable time frame, and actually taking trades away from that peak. Yesterday's high, the market did not come. Yesterday's high, the market did not come, right? Then yesterday's high at this point, the market came and retested, rejected several times, and then continued with its drop, right? So these are basic examples, and I would advise you to make backtesting, a lot of backtesting on several assets, so that you imprint this particular setup in your mind and try to apply it on your real account. On that note, we come to the end of this video. Check out our free Telegram channel. I'll leave the link in the description box below. See you on the next one.